All right, guys. Good morning. Good morning. We've got some data today. So we got this up. Again, honestly, we were kind of correct about yesterday. Top 3-ish. How dare you? Top 5? Man, it hurts. So, All right, so Nonfarm Employment Change drops here at 8:15. Expected at, so yeah, the Nonfarm Employment Change data is expected at 143K. The big one actually happens tomorrow. This is like the prelim. Jobless claims, 8:30. Expected at 231K. Put that up on screen. All right, what's up, Justin, Keegan, Jeffrey, Matt, Pawn, Faye, Adventures, Ed, Radical, Sass, C, Scruff. What's up, guys? Good morning. I'm awake. I'm here. No, that doesn't work. We'll try that one. That one's fine. All right. All right, so yeah, we got until non-farm employment change data, it drops at 8:15. So we've got 54 and a half minutes. So here's non-farm employment change, and then again, jobless claims drops 15 minutes after that at 8:30. What's up, Sam? What's up, man? Yeah. We're gonna do a poll here, I guess. Alright. So the poll is gonna say, are you bullish or bearish on today's non-farm employment and jobless claims data? Bull, bear, vote on the poll. Yeah, it's pretty big. Tomorrow's bigger, though. Tomorrow's the big day. Today is, I would say today's big, but it's not like, it's not as big as tomorrow. Tomorrow is like wildly influential over everything because it's payroll numbers. Like, just the update on the previous payroll numbers, we had like 1,500 people watching. Tomorrow's is the actual payroll numbers. We usually have like thousands here. It's a pretty big day, and just in terms of how much it moves the market, it's pretty big. Nvidia hasn't really gone anywhere though. So Nvidia's slightly green. I told people this. I thought we would get this yesterday. If you guys remember my thesis on the day yesterday, I said I thought we might bounce back some, and then we might turn and come back down at the end of the day. And that's precisely what happened. We went up all day. We turned at like 3 o'clock in the afternoon. For whatever reason, came all the way back down. Could be from a lot of stuff. I'm not sure. I have to look at it. Maybe bond auctions or stuff like that happened. But yeah, we were exactly right. So again, people can say whatever they want, but I think I'm pretty accurate here. Top 3 in the world. Least accurate, that is. All right. Where's gold? I see some people talking about gold. Gold's up. You know, gold's been flat though. All right, guys. So yeah, I'm looking at some stuff. You see Vlad interviewing. Friday unemployment numbers, they can. Yeah, I'm not sure about how Canada does it, Joseph. I'm from Louisiana, where we sell liquor at gas stations. You know, like we really do. You know, in Louisiana, that's what they do. Like, you can buy whatever. And again, you could go to daiquiri, drive-through daiquiri shops in Louisiana. So you can basically, like, go through a drive-through, like, and get liquor. Like, there's, you know, Louisiana's just different about it. But I lived in Canada for a while, and I remember when I was 19, I used to go to the casinos out there because it was legal, because the age there is 19 instead of 21 like the United States. I can't remember. I think they were similar to Texas in that regard, where they had liquor stores though. But I can't remember. It's been a while. And honestly, I was never a big drinker. I don't really think drinking. All right, sorry about this music. I don't know what's going on with this music. It's a little bit too hyped up for me. Too much. Yeah, I mean, gold's up this morning, it looks like. Yeah, gold ended the day yesterday at about 25.26. It's currently at 25.45. This is the day today. If we look at a 15-minute chart, it's down. It's about flat on a 15-minute chart on a, yeah, over the last 5 days or so. 20-day chart is green. Yearly chart, of course, is very green this year for gold. So thoughts on C3AI. Yeah, I saw them had earnings yesterday. I didn't cover them because I don't think C3AI has been the hottest company recently. And again, I think their earnings have like showed this. Like again, I'm not holding C3. You know, and they dropped massively on their report, massively. I thought about covering their earnings. It's just not a big enough company to make it worth it, I think. Can anyone tell me why the announcement time is 8:15 now? So Econ what drops at 8:15 is called the Nonfarm Employment Change report. It is prelim non-farm data. Typically, every week non-farm data comes out. You get non-farm data on Wednesday at 8:15, prelim data. And then on Friday, you get the NFP non-farm payroll report. Today is the prelim data, and the only reason it's Thursday instead of Wednesday like it normally is because it's a shortened holiday week with Labor Day. So Labor Day came this week, and so instead of it coming out on Wednesday, they pushed it back to Thursday, and then tomorrow is the full non-farm payroll report. So that's basically what's going on. Today's prelim non-farm data. And then we also have jobless claims, but jobless claims is going to be dropping at 8:30. Of this song? This song is called The Knob Factor. The K-N-O-B Factor. Hey, all good, Rob. What's up, dude? Mr. Turner, we already know this will be bad, but the market will climb to drop. Maybe. I consulted my crystal ball. John, can you go over some tax loss harvesting as a strategy at some point? I mean, I'm not really the big tax loss harvester, though. Like, I'm a big believer in paying taxes. You know, I mean, I don't like paying taxes, but I don't really try to get around them like that. I usually probably overpay, realistically, my taxes. So... Neo's up, but it's down big over the last few years. So it's up short term, but it's down big over the last few years. Yeah, so it says Nvidia lost $278.9 billion in value a few days ago on the big drop. You know. But I mean, again, whenever something is up as much as it, like, people always like to bring up how much it's down. But I think when something moves like this, you know, if it starts to go like this, it's kind of like not an unreasonable expectation for something to kind of pivot up and down. And I don't think bringing attention every time it does that is like, I don't know. Again, I think if the market does crash, it's going to be because of Nvidia in one way or another. But I don't necessarily think that's a probable thing. Like, you know. Yeah, I'm looking at some other news that dropped. We had the Challenger job cuts. Came in at 75.891 thousand. They just dropped to 830 or 730. Deutsche reaches a settlement with longstanding plaintiff. No, James, your money's never at risk outside the monthly fee that you pay or how much you pay to reset it. You're never risking more than that. Stock market often falls 2 months leading to elections. Here's what history says. S&P has declined in every 2-month countdown since '08. Oh, man. Sorry about the music, honestly. I was going to try to listen to some new music, but like they just throw out all this crazy like cursing music. I can't do it. It's too hyped and angry for me. I mean, I curse like a sailor when we're off stream, but when we're on stream, I try to keep it family friendly, so my apologies, guys. SPY up there at 551.60s. Yeah, I mean, I agree, Scruff. So that's a pretty short time frame. Since '08? Like what, how many elections has there been since '08? 2 or 3? You know, it's not the biggest sample size, brother. You know, not saying you're wrong. I mean, we might drop. You know, I just don't think that's the biggest sample size. And I do think that we have room to drop right now. I think we've been breaking highs in the SPY and the Q. And so, yeah. Again, we got 40 minutes until we have the Nonfarm Employment report here. Yeah, I saw the Tom Lee correction thing, and I think it's possible. I really don't know. Nobody does, right? Like, until we see some follow through with it, I'm just gonna have to assume it's another like aggressive market crash prediction by people who benefit from the attention that they get from telling everybody the market's gonna crash, right? Like, that's what we see a lot. I see that regularly, over and over again. Yeah. All right, chat. Yeah, so bro, I got put in a calf slicer like a couple weeks ago, and my freaking calf still hurts. Seen a video on Bubba Sparks, bro. How about Bubba Sparks, dude? I know I'm old, dude, when Bubba Sparks is like, U.S. Steel deal blocked. What's your opinion? Is what data important? I mean, the data's important, right? But how important, we don't know. Today's non-farm employment change data is not the biggest report. I'm always honest about what's going on with these reports. Again, today's report is not the jobless claims report is somewhat important, and I would say the payroll report tomorrow is absolutely huge, right? But today's prelim non-farm employment change data is, we don't know, right? Sometimes it can cause a big reaction and sometimes it doesn't. I think right now it's more likely that it's going to cause at least somewhat of a reaction, but it might not, and we'll have to wait and see. But the thing today is the volume of data. Today we have the non-farm employment change report at 8:15. We've got jobless claims unemployment at 8:30. And so Yeah, that's a lot of reports coming out in a 30-minute span or in a 15-minute span. And so those two reports together might move markets. Again, we had C3 AI earnings yesterday. They are negatively down. Even though the earnings were better, they lost less than expected. They had good guidance from my understanding. They're still down massively on this report. If you look at the Q, or we can look at like gold. Again, gold is gapping up a little bit today. Yeah, I'm trying to look up the Nvidia news. So a lot of people are saying a full-on rebound depends on Broadcom, which drops today, I think, right? Broadcom earnings are this morning, or this afternoon. No? For AVGO? Should I stream Broadcom earnings? All right, guys. So again, Broadcom earnings today. Honestly, it's a huge stock that's really relevant, and it's heavily weighted in a lot of stuff. Like, isn't Broadcom heavily weighted in the Dow? What's so maybe not. Maybe Dow wasn't what I'm thinking of. What is Okay, so never mind. Broadcom's not even in the Dow. Yeah, let me see this. So, list of S&P 500 companies. I want to see the weight. Yeah, there we go. Yeah, so Broadcom's number 10 in the S&P 500. Yeah, Broadcom's number 1, 2, 3, 4, 5, 6. So Broadcom's number 6 in the NASDAQ here. Yeah. You were right about Dollar Tree, though. It's down a lot after the drop. Yep, I mean, listen, I was right about that. I was right about yesterday's action. Remember what I said yesterday? People kept asking me what was going to happen, and I told people, like, what a lot of people get wrong. And again, I'll go over it again because I think it's really important for people to understand what I'm about to say. Right? Like, please think about what I'm about to say. It makes sense. You know, people can say whatever they want, but they know what I'm about to say makes sense. Okay? And so just listen. All right? So whenever we get big drops like this in anything, right? I'm just going to look at Nvidia because it's the easiest way to look at it. Okay? Balance plays such a huge factor in everything we look at. All right? So if I look at Nvidia here, and you know, we see this massive down day from Nvidia where it dropped like a huge percentage. It dropped freaking 10.5% or whatever it was, from 118s or whatever down to under 106. You know, over 10% drop in Nvidia. When this happens, you know, you get a lot of people that are like, oh, it's the end of the world and Nvidia's just going to go like this, right? But that's not very likely the following days. The market's pretty balanced in that way. You know, the market tries to be balanced. And an efficient market is balanced, right? Which means that stocks are appropriately priced. You have balance in markets. And so whenever we get a big drop like this, a super obvious move that will probably happen is what? This is what I said. You can look at when I said this yesterday. I said this when the market was down yesterday. Or I said this when the market was, when Nvidia yesterday was right around here. What I said was that it's pretty common that after you get these big, oh my gosh, dude, if it doesn't stop freaking resetting, hold on, I'm going to have to change charts. All right. What I said was that after you get these big major drops like this, it's much more probable that a very specific thing happens. What I said is that it's much more probable that after a big drop like this, the next morning, you're going to get bullish action. right? Like, we're going to get bullish action most likely. Why? Because extension on the downside, when Nvidia's down so much, it's much more probable that short term it's going to bounce back a little bit because of extension, just base extension. People see it, they buy it up, they take profit on their shorts. Whatever logic you want to use for why it bounces short term after big drops, you can use it. And again, exactly what I said, almost verbatim. I can't remember exactly what I said, but I remember the logic I said. I said it'll probably push up in the morning and then maybe turn and start going back down towards that downside level in the evening. And that's exactly what it did, right? You can look at this. That's literally exactly what the market did yesterday. And I'm able to predict it just by sheer balance. Balance is very common in markets. It's very common in economic data. It's very common in Fed decisions. And so just making predictions based off of balance is usually much better than any other technical, sentiment you could try to have. And again, that's how I'm able to predict it. I was right. Anybody that watched the stream yesterday knows that, and feels good. Top 3 most right trader of all time ever in the world right now, I think. So cheers to me. Yeah, remember guys, I'm not an investment professional. I'm not liable if you lose. Always make your own assessment, trade responsibly. I have no idea what I'm talking about, and I might be wildly wrong about anything I say. Don't copy me. I do trade off stream. I'm not even claiming to be a good trader. Understand CFTC 4.41 hypothetical or simulated performance have limitations. Don't sue me. Guys, this is what I'm saying. You're not going to win. I've got disclaimers everywhere. I tell people I'm the worst trader of all time. It's not going to work. Cheers to you guys. Anyways. Yeah, I was also right about my Dollar Tree, which I think is a less accurate prediction. I guess I think I got a little bit lucky with the Dollar Tree one. And the reason I thought Dollar Tree probably would go down is this. If you look at DG, terrible time in markets, terrible time. This thing dropped from, wherever it was prior to this thing. This thing was at, where'd it go? Yeah, this thing dropped from freaking 125 all the way down to $90 like a share. If you look at a percentage calculator, this thing dropped a big percentage, 28% short term after earnings for Dollar General, and then it's down to 80, so it's even lower than that now. So it overall has dropped 36, almost 40% from everything. When you look at Dollar Tree had some type of reaction to it. It had a little bit of reaction, specifically in sympathy with Dollar General. And the reason I was right about this was because I looked at it and I said, okay, well, here was their earnings. I'm trying to see. This was the sympathy move it had whenever Dollar General dropped, but it wasn't nearly the same percentage. Like, this one only dropped about 10% when Dollar General had dropped like 30+%, right? 30 plus, it was like 28 to 30% at first and then more. And so percentage wise, if you're betting on weakness in that sector, you could speculate that Dollar General was going to negatively react to earnings as well. And again, that's exactly, or Dollar Tree was going to negatively react to earnings. And again, when we look at what happened during earnings, that's exactly what happened. Dollar Tree. And so you can find plays like this. They're never 100% accurate. Sometimes you're going to do this and theorize about it, and it's just not going to work. And that's okay, because I think we're using probabilities here. And it's not always perfect. So just because something is probable does not mean it's 100% going to happen. And but you do have an edge, I think, sometimes doing it. I'm not telling you this has an edge. Make your own assessment, back test it yourself, figure it out yourself. But yeah. Well, there's certain stocks that are going to have balance, and usually it's a short-term sentiment. Tesla is just tricky. Tesla's up big, down big percentages. It's just harder to gauge stuff like that on, I think. It's more volatile. Yeah, I'll have to check that out, Sam. If it gets really short, it's even harder to predict. Like, what people have to understand is that the shorter time frame of trading, the harder it is. The longer term trading it is, the longer term investing it is, I should say, the easier it is. And so long-term value investing, the easiest game in markets. Super high percentage, you could value invest, you could just dollar cost average into stuff, just buying and holding long-term in good stocks is the easiest way to make money. It's almost guaranteed long-term. Short-term, you can have some risk, but it's almost guaranteed long-term. The more you zoom in in terms of trading style, time frame, the much harder it is, you know, to where when you get to like super short time frames, it's incredibly difficult. But I scalp. With that said, like, you'll see me day trade, and I day trade very short term. So I'm not saying it's impossible, but it's, you know, you got to understand where the edges are. All right, guys. All right. I don't know what's going to happen in the coming weeks. ED, I think a lot of it is based off of economic data, elections. You know, we have CPI next week. We got the Fed decision in September, you know, and that might have a volatile reaction. We don't really know how the market's going to react to that. Yeah, I mean, check out my algorithm here. I was looking at it, and it seems to work really well in the NASDAQ. So, like, look at this. It's not perfect, of course. Like, I'm not saying it's perfect, but when I was looking at it this morning, it's pretty good. Like, right, like, look at the last, this one definitely worked, literally called the bottom. This one definitely worked, literally called the top. This one, it might have bounced back some, but I'll just say it didn't work. But this one definitely worked. Look at that beautiful top. Called the breakdown really nice of me. So that's 75% there. Again, I'll have to keep looking at it, but, you know, look, that one worked. You got a nice little follow through. That one, maybe, I don't know. But the reason I was looking at this is from yesterday. Like, look at yesterday. Top, bottom, top. I think it probably works better in choppy action too. But yeah, I was studying that on the NASDAQ futures contract. And then we have the strict reversal one that I built too. This one's only a long one, much less common. And I think I used it a lot of like a 5-minute chart. You know, and we did get a little reversal there, but I have to check a 5-minute chart. I can't remember what. Yeah, look at that. It's a longer term one here for sure, because, like, look, strict reversal, nice little bounce. Strict reversal, nice little bounce. So I remember this one doesn't show up nearly as much. That one was wrong for sure. Those are mostly right, though. Yeah, look at that one. Literally called the bottom here, if you guys want to see it. So. Oh, yeah. 5-second scalping, Sam, is honestly virtually. I mean, I'll do 5-second scalps, but I don't really. You know, I always know if I get into a good one that works, I always know it's not a super high edge thing that I can't keep doing it. All right, SPY just went slightly red on the day. If we look at the SPY and the turnaround that it's got, SPY just technically went red on the day. We can see Nvidia really bouncing off of that previous closing price. Again, I'm gonna put it in sub only mode, chat. So if you have not already, hit the subscribe button, hit the notification bell. I appreciate the love. Thanks so much. Yeah, and check out TopStep, guys. Again, I've been having a lot of fun on TopStep X's platform. They're a sponsor or affiliate of mine, I should say, and so I'm biased for sure because I get paid by them. But genuinely, really nice platform. And again, I can't get a like. I got funded a couple days ago. And again, I can't get, I keep remembering how powerful this is. 0 commissions on TopStep X. Like, that's a really useful thing. Like, I made $33 with micro contracts here, and my fees were 74 cents, guys. Like, so there's a small amount of fees, but what this allows me to do, and what I'm really excited about, is that I can scalp with micro contracts on TopStep. Like, that is a powerful thing. Like, before, if I tried to scalp with micro contracts, it's taken up a chunk of my commission, right? Like, it's taken up a chunk. Commission is taking up a pretty big percentage of trades. And that's pretty standard everywhere, but on TopStep X specifically, like before on Quant Tower when I would trade on TopStep, Commissions would take up a huge chunk if I tried to trade micros. Here, I can trade and there's basically no commissions, and I can scalp and trade how I trade with smaller size. And I think the more volume of trades I get in, the higher percentage I'm gonna be. So I'm genuinely really excited, and I think if you're trying to trade like I am, where you're trading small micro contracts, TopStepX is the platform. Right, it's the platform to use. Again, TopStep is a funded program in futures, so they give you a demo, test your skill. If you could pass it, great. They fund you between 50K to 150K, 90% split. The base one's only $49 a month. If you fail it, you're only out that $49. It's not the end of the world. And again, some of the best rules once you're actually funded, you can 90% split. You just have the freedom to do a lot of cool stuff on TopStep once you're funded. And so again, if you want to check them out, again, they are an affiliate of mine, but I genuinely think this is a powerful thing. And I'm genuinely, I think y'all can probably tell I'm actually excited about being able to do that. Even though I had a losing day yesterday, but I only lost $50, and that is what I'm really excited about, because if I was getting charged like a bunch of commissions with micros, I'd be down a lot more. So check them out if you want to try the funded account program. Again, you got to have reasonable expectations. Most day traders lose, but it's a lot cheaper to lose here than it is to put up the money yourself most of the time, because most day traders lose, I think. Yeah, I mean, it doesn't matter, Jay. I'm not going to go into that, brother. I think they're both good. I'm not going to really go into that, of course. Yeah, so again, the market bounced a little bit. You can see NVIDIA pop. You can see the SPY pop. Again, we're looking at the NASDAQ, which is basically the QQQ price action here. And it's down, slightly red on the day. So you can kind of see that here as well. We still got over 20 minutes left until this report. We got 600 people live watching. I appreciate the love. Thanks so much. Looking at our poll numbers here. Are you bullish or bearish on today's non-farm employment and jobless claims data? 55% think bull, 45% think bear. So we got a guy with a check mark. Channel hasn't posted in a while, but it's all right. Hey, what's up, MJ? Am I gonna sell gold? I don't know. Probably not. Both announcements should be lower than expected for a bullish reaction. Not necessarily. I think the market is back to kind of good is good and bad is bad scenario. And so I think the market is more in a period, more in a state in which at least all I can go by is what's happened recently. Okay, so number one, I'm going to preface it with I genuinely have no idea what's going to happen. Data could come in the opposite of what I say here and do the opposite of what I think. So nobody knows. Nothing's definitive. We can only look at what's happened recently. And what's happened recently is that economic data showing economic growth has been seen as a positive, and the market has reacted positively to it. Data that showed economic weakness has been seen as a negative, and the market negatively reacts to it. Although, again, it's nuanced, and sometimes the moves pan out over a longer period of time if you zoom out. But yeah, I genuinely don't know. We can only wait and see. But lately, we've had a good is good situation where economic growth is positive and economic weakness is negative. But it doesn't mean we're going to get that today, and it might be the opposite. So the yen carry thing, Justin, basically was this. All right. And again, this is from my understanding of it. Maybe I'm wrong, but I don't think I'm wrong. Maybe I am. I don't know. But the yen carry trade. So investors in markets love to use the yen because it had low interest on it. And so investors would use the yen to buy up a lot of like US based assets like bonds, like US stocks in the US stock market and exchanges. And, they would buy up they would use the cheap leverage they got from low interest on the yen, and they would buy up a bunch of US assets with it. Well, what happened a couple weeks ago that caused this little mini flash crash is that the Bank of Japan came out and said that they were going to be much more hawkish, which means they were going to push for higher interest rates on the yen. And basically a lot of investors panicked because they thought that they would, since the bank was pivoting to a more hawkish stance, that they would then get less favorable interest on the yen. And so what happened is that simultaneously a lot of them started to unload their US yen positions. And this caused like a flash correction in markets a couple weeks ago where the whole market basically dumped. And again, that was on the heels of the Bank of Japan basically coming out saying, hey, we're going to be more hawkish. Now, following that, shortly afterwards, some of the leaders there pivoted and said, oh, well, we're going to be more dovish moving forward. But then recently they pivoted again back to saying they were going to be more hawkish. So we really don't really know. But yeah, that's essentially, from my understanding, what happened. In the end, though, the market ended up rebounding very quickly back up to where it was prior to it. And so it wasn't the biggest thing. It just kind of freaked a lot of people out. It was kind of similar to like 1987, where we got the flash crash and then essentially an immediate rebound back up in the coming, months. Is this non-farm payroll one they revise again and it may be significantly different to the initial report? It could be, yes. Based off of their last revision. What is your logic today for US dollar? Well, payrolls going higher than expected is probably going to boost the US dollar. And vice versa. Lower than expected payrolls is probably going to push down the dollar. But we might have inverse things to the market. We don't know. Oh, yeah, 1987 was a much larger example of it for sure. What I meant is that, 87, we had a big flash crash and then basically an immediate rebound back up. But it took months to get back up there. Might have taken a little bit longer than that. But, yeah, you're correct. The 1987 stock market crash was much bigger than a couple weeks ago, for sure. Much more influential over the world, finance, everything. The 1987 crash destroyed a lot of banks, investment firms, traders, which is and I'm not saying a couple weeks ago was nothing, but it in hindsight it wasn't really comparable to the reason I compared it though is because look, we can look at the 1987 crash here. All right, so here's the S&P 500, which is what I'm going to use to look at the 87 crash. If I customize this, or I can put up a monthly chart, right? A couple weeks ago, this was the drop we got. No, I'm sorry. This was the drop we got a couple months ago, so it's basically nothing. If we look at 1987, which was... I mean, I guess it's kind of comparable. So here's 1987's crash, right? And this is a monthly chart. So 1987, we basically crashed for 3 months. It took us a while to come back up, though. So after 1987, we started to rebound by... we had already basically filled most of the gap by... 1989. So within 2 years, we were basically right where we were. Within 3 years, we had already broken the highs, the previous highs. So yeah. But again, here's 1987, just to show you the difference, and then which is called Black Monday, if you don't understand. And then here's this month, so wildly different, of course. But yeah. Maybe I could look at the Dow. I don't know what I think they liked the Dow and stuff back then, but hey, John, thoughts on the yield on inversion thing? Yeah, I don't know, bro. I think yeah, I've never seen the TV show. So non-farm day, I'm not telling you guys, like, again, guys, to be completely honest here, a lot of people are asking me, should I buy gold? Right? A lot of people are asking me this. I see people ask me this all the time. The reality of it is, guys, me, as well as everybody else on the internet, I don't know whether you should buy gold or not. I tell my wife the same thing. You know, gold is a great long-term inflation hedge, but short-term, it can do anything. It can downtrend for 5 to 10 years. You know, we don't know what it's going to do. And so the way you buy gold, in my opinion, and maybe I'm wrong, I'm not an investment professional, don't copy me, I'm not liable if you lose money. But the way I buy gold is I dollar cost average into it over a long period of time with small size. Okay, so I buy a little bit at this price. I buy a little bit more at this price. I buy a little bit more at this price. And over time, dollar cost averaging curbs some of the short-term volatility that you get in gold, but it still allows me to capitalize on gold's long-term benefits, which is that long-term, it generally goes up very nicely. The problem with gold right now is that gold is at lifetime highs. You know, gold is right around lifetime highs, and it's been there for a while. And so, would you rather buy a chart that looks like this? You know, the risks of buying a chart that looks like this is that what happens if gold starts to downtrend for a decade? You know, like, it's possible. Gold behaves like that sometimes, and then it might make another big run. So again, if you look at gold's history, gold makes big runs, and then here it downtrended from 2011 all the way to 2020, right? And then it made another big run, you know, and then it downtrended for 3 or 4 years. And then it made another big run, right? And so again, am I going to buy it at its climax, at the peak right now? I'm not personally interested in that. And again, if I had small size, maybe. But you got to understand, gold can do anything. It could downtrend for another 5 years. But if you hold it long term, again, generally again, generally, I'm not saying you should buy it, but generally it's a good long term investment. All right, guys, we got 10 minutes. Dude, the problem is, like, I see people obviously copying my keywords here, dude. I mean, I guess I'm kind of flattered. Like, when I Google Nonfarm Employment Change live, I'm kind of flattered that I see people, like, you know, like, basically carbon copy my title. As long as they don't call freaking rate hike, like, all rate decisions rate hikes, and they come from meme stock trading, you're fine. Right, exactly, Sam. That's a perfect way to look at it. Hey, thanks for explaining details. Are you a full-time trader, or is it something that interests you? I mean, I wouldn't really call myself a full-time trader. I don't live off of my trading profits purely. You know, we make money in a bunch of different ways. Certainly not living straight off of my trading profits, and I'm not claiming to. So, yeah. Yeah, I mean, Dylan, you're taking, like, so again, Sam said if you think the world is going down the pooper, buy gold. And then Dylan says if the world is going down there, your shares of gold won't matter. He's not talking about the world ending, brother. Like, he's not talking about, you know, a zombie apocalypse, dude. Like, he's talking about if there's geopolitical conflicts, if there is all these problems that short term are going to have an influence over the economy and trade. Generally, long term they won't last, and long term the S&P, the Nasdaq are going to go up. But short term, you know, you got conflict news, you got all this stuff going on. You know, you got good and bad news. It doesn't mean the world's ending, you know. It generally just means that stuff's going on, which is the nature of the world over the past 1,000, 2,000, 3,000 years. Something's going on throughout the world. But over time, the S&P, the NASDAQ has gone up. So, hope all that makes sense. Yeah, as long as they don't put out the top 3 worst and best ever, you know, I think we're okay. Yeah, I mean, if it gets that bad, like, the move is to buy freaking... Gold's going to be a shiny rock. Who cares about gold in that situation? You know, again, in that situation, like, I would say, like, antibiotics, you know, are going to have massive value. You know, food, like, long-lasting preservative food. You know, water, other stuff. Yeah, the Dow's different though. It's a different beast. Good morning. Do you trade stock options? I mean, I don't really trade options a ton. I trade futures and stocks. So non-farm employment data is coming out today. So non-farm employment drops today. Jobless claims drops at 8:30. Non-farm employment drops at 8:15. Yeah, vodka. And you know, you hear this, and again, I'm going to go through this example again. Like, you hear this. Look at NVIDIA break lows again. So NVIDIA breaking lows of the day, starting to fall. Look at this big drop in NVIDIA right here. So NVIDIA's starting to dump. But yeah, like, so I hear people that sit on cash long term, and that's a horrible idea. Like, I never understood it. People are like, yeah, I'm just gonna sit on cash because I don't trust the stock market, they'll say, or I don't trust anything. It's like, all right, well then buy bonds. Bonds are virtually guaranteed by the U.S. government. You can earn 5% a year. And then, you know, like clockwork, guaranteed by the U.S. government. And then people will say, oh, well, I don't trust the U.S. government. Like, it's like, dude, okay. What if the government's not around anymore, they say. And it's like, all right, well, in that situation, you got a lot bigger problems than your bond payments, sir. You know, you got a lot bigger problems than your cash. Your cash is going to be virtually worthless, too, in that situation. So you might as well hedge it towards something. If you don't hedge it, you will lose money over time. And, again, I'm going to go over my once a day negative compounding thing. Say you got 100K sitting here, and say inflation rises at 3% a year, which is roughly where it's at. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're going to lose almost 30% of your value in that cash. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 20 years, you're going to lose 50% roughly. So if you do not hedge against that, you are going to lose money. You can do it in real estate. Real estate's probably a good example because real estate's always innately valuable. It's tangible. You know, so real estate can be powerful in that regard also. You know, you just got to make sure you hedge against something. What is non-farm payroll? Sorry, I'm quite new. They're literally exactly as the name suggests, brother. Non-farm payrolls are payrolls that don't come from farms. Yeah, you can put it in a CD. You can put it in a lot of stuff. You can put it in a CD, guaranteed. You can withdraw whenever you want. You know, you still earn 5%. You can put it in a... You could buy a Treasury bill ETF and get paid dividend payments, you know, every month based off of the annualized 5.5% or whatever it is right now. I did that for a long time too. So, hey, what's up, Dean? Yeah. All right, guys, 2.5 minutes here. 2.5 minutes before non-farm employment data drops. Again, 2.5 minutes. We will see what we get. All right, guys, so here we go. We got 2.5 minutes left. 2.5 minutes left. Again, check out TopStep if you haven't already. TopStep gives you a demo. Test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, $49 for the base one. There's 0 commissions on TopStep X. It's one of the most powerful platforms in the game. 0 commissions in futures means that you can trade micros in these funded account programs once you're funded or when you're trying to get funded, and have 0 commissions trading micros. It's a powerful thing. They're an affiliate of mine, but genuinely the best option if you want to try a funded account program, in my opinion. There's the link. Check it out. All right, guys, less than a minute here. Less than a minute. Again, I'm going to throw it in sub-only mode. I think we're already there. Yeah, we are already there. So hit that subscribe button. Hit the notification bell. I appreciate it. Here we go. We got 40 seconds left, guys. 40 seconds left. Non-farm employment change data is expected today at 143K, 143. Jobless claims expected at 230, but they drop at 8:30. So be ready here. Chat, let's do this. 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. All right, here we go. Here's the report. All right, so the timer's a little bit early, but that's all right. So the report's dropping right now. Okay, ADP 99,000 for non-farm employment change. 99K, much less than expected. 99,000 for non-farm employment. And look at this negative reaction. 99,000 versus 144,000, 143,000 expected. Look at this data release. And it's under 100K for payroll data. Under 100K, definitely, you know, and this is prelim data, so we'll see the final one on Friday. But again, here is the report. Much lower than expected here. Although, again, it's not the biggest reaction. I'll put that number right there. So we did have a negative reaction to this report. Look at the drop. We've kind of retraced it back. It doesn't mean we're going to keep falling here. You beat Bloomberg. Once again, I'm telling you. You know, I got some sources that we cover pretty quickly here. You know, like, people like to act like I don't provide any value or whatever. They're just mad. You know, usually they're just mad about their own situation, and it's all right. All right, so again, 99K. Market negatively reacted to this. Tomorrow is the big one. This is just prelim. And so this is just prelim payroll reports. Tomorrow is the big one. All right, guys, so we are dropping down a little bit here. We're at 105.30s here, guys. 105.30s. Still breaking lows. So you can see the NASDAQ break here. I wonder if payroll... Is gold dropping on this report also? I mean, here, let's look at the Dixie. We had some people ask about the dollar. I'm sure the dollar's dropping on this report. Yeah, so there's the dollar fall. Yeah. All right, guys. All right, so we're at 105.02s. 105.02s. The NASDAQ at 458s. Look at the dollar index fall. Look, there's 105s. Look at the support level we drew at 105s. Let's see if that holds. Here's gold. Gold is actually up, I guess, on this report. Weaker payrolls means optimism in gold. Maybe, I don't know. I'm just kind of speculating. But Yeah, so jobless claims drops in 12 minutes. All right. Yeah, so 8:30. Yeah, so again, let's do this. I'll put a timer up for jobless claims numbers. So again, like I said, today is not really like, today is kind of the volume. All right, so this is a little bit early, but we'll pause it. Today is kind of like the volume of reports. We have non-farm payroll prelim reports. Tomorrow we have the actual payroll report. And then tomorrow we also have unemployment. So again, today, tomorrow, big string of releases, very relevant, very important. All right, so again, the Q is breaking down here. So is the NVIDIA. So NVIDIA down to under 105s. Gold's still holding strong, though, despite it all. Correct, Scruff. The market's going to do fine regardless of who it is, to be completely honest. You know, the economy's a different animal, though, Scruff, but the market generally is going to do well no matter what, regardless of which side wins. Short term, let me clarify. Short term, that's not true. Short term, it does matter. And again, depending on each individual election is going to depend on how the stock market reacts short term. But when you zoom out long term, the market's generally going to be fine no matter what. All right, guys, we got 9 minutes until jobless claims report. 9 minutes. All right, so again, we got the NASDAQ breaking down here. We have NVIDIA flushing down here. So since this prelim report, we've had 1, 2, 3, 4, 5, 6, 7 red candles in both the NVIDIA, in both the NASDAQ, and the Q. Gold has been pushing up despite all of it, though, but tech is feeling this. Oh, we do have PMI data today, too, man. We got a lot of stuff coming out today, man. So, yeah, we got ISM PMI data release, too. Yeah. What about the SPY? Well, I'm sure the SPY's following suit. Gold just broke highs of the day, I think. Yeah, the SPY's following suit. And they're all kind of red on this report, you know. And again, you can kind of see the numbers right there. Again, I might buy up this a little bit in micro contracts. So again, here's my Top Step X platform. I'm going to buy this up. I think we're down enough. I only have a couple minutes to try to capitalize on it, though. So I don't want to hold this through the jobless claims report. So this is Top Step X. Again, if you want to trade futures, I'm basically trading the QQQ price action. You can see how similar it looks to NVIDIA here. All right, there we go. We got a couple bucks here. And again, you can kind of see how similar it looks to NVIDIA. We just made about 20 bucks on this funded account. I'm going to add a little bit more to this here. See if we spike up. There we go. Take a little bit more off. Cut that. All right, so we just made about 30 bucks really quick, riding that bounce up. And again, I'm basically day trading the QQQ price action in futures. The good thing about Top Step is that I can day trade, short, buy market, sell market. It's very similar to day trading stocks, but there's no PDT rule. And I can basically day trade the QQQ price action in futures with no PDT rule. And the zero commission thing in futures makes it powerful because I can trade micro contracts like I just did, take small little scalps, and when you get 10, 15 of those trades in a day, the gains add up, but the commission you can see here is only 74 cents a trade. It's not commission. There's no commissions. The fees are only 74 cents a trade, so they're microscopic fees. Powerful way. You can also trade gold. You can trade some currencies in the futures market. And again, even if we look at Nvidia, you can see how similar like the NASDAQ and futures looks to Nvidia. And so a lot of people should be day trading futures, but they're trying to day trade stocks and get around the PDT rule. When in futures, there's no PDT rule. And so again, they are an affiliate of mine. I'm biased because they pay me money, but again, genuinely a good platform to learn day trading. And if you don't have that much money and you want to get started and you're a good trader, you can use this and kind of roll up some, you know, there's the link. Check it out. What I don't get is that the people in the market, in case of recession, is expecting cutting very big rates and also printing money later by the Fed. Would it then not be possible? All right, guys, I'll be right back. Okay, I'll be right back. All right, guys. I love you. Have a good day. All right, sorry, I'm telling my kids goodbye. All right, guys. Sorry, family comes in here, and I gotta prioritize them. Yeah, we got 3.5 minutes left, guys. 3.5 minutes. Nvidia bouncing back here, so Nvidia is bouncing back. Yeah, so market, yeah, well tuned engine. You know, again, and I know I cover a lot of economic reports early, but it really is a situation where like fundamentals rule the market. Technicals are insignificant long term, right? And a lot of people love trading technicals and they get really wrapped up in technicals and algorithms and patterns, but fundamentals are key. Math psychology and fundamentals. Rate cuts are an indication of a failing economy. Not always. If rates have been pushed to really high levels to try to combat inflation, it's reasonable to inevitably bring them back down eventually. It doesn't mean the economy's super weak. It just means that we've kept them high for as long as possible. And again, if we didn't do that and didn't keep them down, people would complain about us keeping interest rates. Again, I'm okay with keeping high interest rates, but it shouldn't be the base case. High interest rates shouldn't be the base case. Like, you don't want interest rates to stay at 5 to 10% like they are now. That's not the base case. And I don't think bringing them down eventually, once we show stability and inflation, means economic weakness. You know, I don't think it does. I think it could, but I don't think it does. And I think that this is a situation where we've raised rates really aggressively for very long. And at this point, it's time to bring them back down. And according to the Fed, I, again, personally think we can keep high rates and really combat inflation. I'm more worried about inflation than a recession. But again, it's an election year, and so one side saying it's the worst it could ever be, how dare you, and then the other side is saying it's the greatest, the market is thriving, and usually neither of those things are true, and people are just so biased and root for their political parties like their football teams that they just kind of regurgitate whatever their side is saying, and usually the truth is somewhere in the middle. Like, we're not in a recession, but things aren't perfect either. Inflation's a problem. It's somewhere in the middle. Anyways, Broadcom bouncing up a little bit. The NASDAQ did bounce up a little bit. We got jobless claims unemployment filings dropping in about a minute. And again, we'll see what happens. All right, guys. Again, jobless claims are expected at 231,000. Yeah. Yeah, y'all hit that like button. We got 20 seconds here, guys. 20 seconds. I'm going to mute this. This is actually a little bit early. We still have about 20 seconds left. If you look at your clock, it's not quite 8:30 yet, so we still got about 15 seconds left. All right, guys, 5 seconds. Let's see what we get. Again, jobless claims expected at 231. Higher claims means more unemployment. Lower claims means less unemployment. Let's see what we get. And the report is live right now. Jobless claims showed up at 227,000 versus 231,000. Less claims than expected. More people working. Lower unemployment than expected in terms of jobless claims, which is a weekly report. But again, it came in at 227 versus 231 to 230 expected. Lower claims, more people working, more. And so again, that's ultimately better for economic stuff. Market's right back up to where it was prior to this. Essentially right back up with jobless claims numbers coming in basically as expected. And so it's mixed results. We had economic growth signaled in jobless claims. We had economic weakness signaled in the employment change data. So it's kind of somewhere in the middle. We also have services PMI coming out later on this afternoon. And so that's a big report. You want to stick around for that as well. And in the end, like I said, guys, right now we're somewhere in the middle. Again, you can kind of see we're not in a recession right now, right? The signs of a recession are what? Nobody really working, nobody really spending, stagnated growth, right? And we just don't see that, right? GDP's 3%, unemployment's under 5%, you know what I mean? Like, we're not in a recession currently. And again, I think a lot of people regurgitate what their political thing says, and again, I'm neutral politically. I'm not against you. I'm really not. I don't really care about either side. I don't trust either side, to be honest. But we're not in a recession currently. Now there's some signs, just to be objective about it and give you both sides. There's some signs that we could be heading there if things don't change. The yield curve uninverting, which means that essentially long-term, in theory, long-term bonds should pay out higher yields than short-term bonds, because longer term is less risk, shorter term is more risk, right? So in theory, longer term bonds should pay out more in yields than shorter term bonds. The yield curve that they're talking about is when it inverts, right? When short-term bonds pay more than long-term bonds in regards to yields. That is the inversion that they're talking about. And historically, when the yield curve uninverts, we've been inverted for what, years now? When it uninverts, that's a pretty good recession sign. It doesn't mean we're in a recession. It means a recession could be coming. We also had the SOM signal, the SOM indicator, right, which basically is looking for unemployment spikes of 0.5% or more, I believe is what it is. And so we did see that as well. And so there are some signs that we could be heading towards one, but we're obviously not in one right now. We're obviously not in one. And again, I think people have to really understand what it all means. I don't think we're in a good spot. I don't think that the economy is perfect. I think spending has caused massive inflation spikes, as well as the QE that we had in 2020, as well as the stimulus checks and all that stuff that we got in 2020. I think that made things worse, and it made spending spike and inflation doesn't go down, and so people are still kind of stuck with high prices, and that's what they're genuinely unhappy about. But it doesn't mean recession, right? Like, people are still genuinely able to find work. Of course, we're going to have a couple people that are like, nah, but it's generalized. Generally, yes, people can find jobs right now. And we see that reflected a lot of places. But again, it doesn't mean things are perfect. And I think that's what people have to understand. Just because I'm saying we're not in a recession right now does not mean I'm saying things are great. I'm not saying things are perfect. As is most things, the truth is somewhere in the middle, you know. Well, it was a she, Big East. So Sam is a female, I believe, and so I'm pretty sure she said that it didn't apply. Correct, but I don't know if that necessarily means, you know, I think a lot of them don't want a recession to happen, and so they're worried about it, and you know. Anyways, market bounced right back up. We're kind of flat on this report. The SPY is completely neutral as well. Continuing claims also showed lower than expected numbers too. You love talking about recessions? Well, I mean, I think my channel is mostly an economic report channel, and I think recessions and economics go hand in hand, especially when it comes to economic data like unemployment numbers and payroll numbers. Of course, we're talking about recessions and if we're going to hit one or not. That's everybody in economics is talking about that, brother. You know, and again, shout out to the 1,500 people that are watching me. I appreciate the love. Thanks so much. Trucking industry is getting beat up because of the sea boom. At the same time, you have a lot of stores closing down as well. Well, stores in general are like the future of technology is different. Brick and mortar is going to struggle. Technology has evolved to where it's rendering a lot of those stores obsolete. People don't need to go to brick and mortar stores anymore. It's why you see stores like Dollar General and Dollar Tree failing right now, is because you can order the same stuff on Amazon for cheaper, get it shipped to your door within 24 hours with free shipping, and that's going to make a lot of these retail stores again simply obsolete. But there's going to be some ones that stick around, right? And again, I think the people who are struggling the most are the older populations because they don't understand the internet as well, right? I'm not saying this is true. I'm not saying this is universally true. I know, like, I have parents, I have in-laws. My parents are generally pretty like tech knowledgeable, and my in-laws are too, to a certain extent. But I think in general, the older the people are, the less technology savvy they are, you know. And so what that means is that what a lot of what is going to replace brick and mortar retail is going to be tech, and it's going to be online. And I think the older population doesn't understand that as well. And so for them, it's like the end of the world. They don't understand, you know, tech is rendering a lot of brick and mortar stuff obsolete, and what they're conventionally used to, which is retail, going shopping at stores, that's changing. And I think people fear change. I think in 1909, people feared change in terms of the automobile and the carriage. And I think over time, you know, everybody ended up adopting the automobile. And I think a similar thing will happen here, but in general, people fear change. And so you see that reflected in a lot of places. Yeah, I mean, again, Dan, you can disagree with me, and it's okay. I think the other guy that was disagreeing with me was also named Dan a few days ago, and again, it's all good, bro. But I guess, like, I think it's very self-evident. You know, I think it's very obvious that over time, people are not going to be shopping at Dollar Tree anymore, brother. You know, I think that's very clear, like very obvious. Over time, people are just not going to shop there. Why? Because you don't need to anymore. You know, the stuff that you buy there, you can buy elsewhere, right? And as well as like the other aspect of it is big stores are replacing, like you can get the same stuff at DG that you can get at Walmart now for the same price too. And so, you know, competition in that regard from big retail is picking up. And again, it's going to render Dollar General, Dollar Tree, Big Lots, like you've seen those get really rough in terms of, you know, again, the way you have to look at it is like this. How many people do you think go to Dollar General every day? I don't think it's a lot. I would say maybe, 10 customers, 15 customers, depending on the location, right? Sometimes it's probably less than that if we're talking about, like, country locations. You know, what is their margin rate? Like, what, like 5%? And so I think when you look at it, it's going to be rough for them to stay afloat over time. And I think, you know, even if you look at like, so here is a look at specifically, like if you want to look at margins, like I'm saying, if you want to look at margins like outside of any speculation, we can look at the actual numbers here. If you look at Dollar General's EPS, which is margins, their earnings per share, right? This is Dollar General over the past 4.5 years in terms of margins. This is Dollar General since 2020, right? And what you see is their margins are getting worse and worse and worse, and they have pivoted to negative growth, right? Which does reflect my sentiments here. And again, maybe I'm wrong. Maybe they succeed. Maybe Dollar General somehow succeeds. I think when you look at brick and mortar retail stores, the thought experiment you have to do is you have to say, hey, you got to say, hey, what does this sector look like in 10 years, right? In 10 years, do you see people still shopping at these stores? And I don't think you do. I think these stores did really, really well before the internet shopping phase picked up, but now that a lot of people shop online, if they do go to the stores, they go to big stores so they can consolidate their trips into one big trip, and they go to Walmart or wherever. And I think that's going to mean less and less of a need for places like Dollar General and Dollar Tree. But again, maybe I'm wrong. But I've seen a lot of these businesses fail in my area recently. Dollar General, Dollar Trees. I've seen a lot of them fail. And I think that trend is going to continue. Yeah, there's nothing that's a dollar at Dollar General or Dollar Tree. All right, catching back up with the chat. We had a lot of people talking. All right. Yeah, we got a lot of comments. I'm trying to catch up. So bear with me, chat. Confirmation bias is a thing for sure. 100%, right? Confirmation bias is a powerful thing. I talk about it a lot here on this channel because it's absolutely true, right? Like confirmation bias. If you don't know what confirmation bias is, if you hear me saying it a lot, what confirmation bias is humans tend to want to confirm things that they want to happen, right? They're essentially, you're more likely to believe things that you want to happen, that are pleasant to you, right? So essentially an example of this is I could say, hey, I might be more, somebody could tell me, hey, John, I've got the formula to win the lottery every month for the next year straight, right? I'll sell it to you for $1, I might be more likely to believe that's true, even if I know it's complete nonsense, because I want that to happen. I want to believe I can win the lottery every month this year. Another example of this that you probably see reflected in trading is you see people say, hey guys, if you buy my trading course, you could turn $1,000 into $300K in 3 weeks if you just buy my trading course, guys. John's trading course. Confirmation bias. People are more likely to believe that's possible, even though it's complete and utter nonsense, right? Why? Because they want it to be true. They want it to be true. Same reason people get stuck in pyramid schemes, right? People get stuck in multi-level marketing schemes like Herbalife or like It Works or whatever the unique makeup pyramid scheme, whatever it is, right? People are more likely to get caught in it. They're more likely to believe that they're going to get rich, even though the red flags are there, because they wish it to be true. They want it to be true. And I think here, a lot of people who invested in Dollar General and Dollar Tree, and maybe they're down big and they want to believe that they're going to be able to make their money back, they're more likely to be optimistic about it, even though the signs are there. I think that they're going to fail eventually. And again, I could certainly be wrong. I don't want to seem arrogant, even though, and I know some people are probably not liking me if they're holding Dollar General and Dollar Tree, but it's just my own opinion. I might be wildly wrong, not an investment professional. I agree with you. I just see them all failing equally. Yeah, maybe. Momentum is visually and apparently weak with little to no fuel in many of these big names and big weights such as Microsoft, Nvidia, Apple, Amazon. Well, there's fuel. They're involved with AI, and that's going to open up a lot of business for them that they didn't have prior to these runs. All of those, including Amazon, are going to have AI implications and stuff like that they benefit from. Yeah, why go bump elbows with a bunch of people and wait in line when I can order it today for the same price and tomorrow it shows up at my doorstep? Not just tomorrow, but you have to take into consideration how good shipping is going to get in the next 10 years. Drones, all that stuff is going to make a lot of this stuff get shipped to your door same day. I can buy stuff on Amazon and get it at my doorstep the same day now. And that depends on location, whether you're next to a warehouse or not. But that over time is going to make retail stores like Dollar General and Dollar Tree obsolete. You don't need to go there anymore, and they're going to lose more and more customers. And I'm not saying there's not going to be some stubborn people that still go there. Usually the older populations, right? But over time, that's going to fade. Right. This is exactly one of the reasons commercial real estate is failing. I see the Big E say this is one of the reasons commercial is failing. Absolutely, 100%, is because this same thing is reflected in every sense of retail outside of this, as well as technology growth. In remote work, right? Remote work has rendered a lot of warehouses full of people obsolete. Businesses don't want to pay that anymore because they can have similar production. It might not be exactly the same production level, but at least similar levels with remote work. And I think people like remote work obviously more as well. For now, we continue to monitor the bullish channel here and see if bulls will step in with overwhelming momentum on the Fed rate cut that is coming. Yeah, do y'all think the Fed's gonna? Do y'all think the market's gonna like or dislike rate cuts? I think it's more ambiguous than people think. I think everybody assumes that the market's gonna like rate cuts, but I think we could drop from it. Question: what's your opinion on the 2-10-year yield inversion above zero line? Again, historically, that's a recession indicator. I'm not sure if it's going to happen. It's not a perfect thing. Sometimes we do want to invert and we don't go into a recession, and so a lot of it's going to depend on a lot of different factors, but maybe. Yeah, we have services PMI data coming out at 10 o'clock as well. So Nvidia and other investors back Applied Digital with $160 million in funding, according to Wall Street Journal. Yeah, so that's what's going on with APLD. Some people are talking about APLD. This is the news that's happening with it right now. Kmart, man, I remember Kmart. Like heaven, John explaining religion. I don't want to really get into the religious part of it, but I'll comment on it. I think it's arrogant to assume either one. I think nobody knows what's going to happen. And I think in a world where we have simulation theory, which states that if it's possible that one day we'll have the technology to make what we currently see out of our eyes virtual reality, it's actually much more statistically probable that we're already in that virtual reality simulation and just we're oblivious to it, And I think when you start to think on that level, it has a lot of different implications about everything. And so I don't think, I think it's more arrogant to assume that nothing happens than to assume that, because I think genuinely nobody knows. Nobody's really been back from it. And I think really even people with near-death experiences have pretty consistent recollections of what happened. Now maybe you could say that's just DMT going off in their brain or whatever, but I don't know. I think it's an interesting topic for sure. That's why I responded to it. Yeah, I don't know about trading courses. Yeah, confirmation bias. We all have confirmation bias for sure. I want to believe that my kids are going to grow up and be super successful. And I hope this is true. I'm going to put it out there in the world. It's going to be true. But who knows whether that's going to happen or not. I want to believe that my kid's smarter than everybody. I want to believe that I'm smarter than everybody. But deep down inside, I'm only top 3. And I think I got to just accept that, top 3-ish. Cuts are priced in. Rate cuts not real. Yeah. The guy that came up with that inversion said he doesn't think the time this time applies. Really? So he doesn't think the rate curve uninversion is going to cause signal a recession, I should say. Why is September the worst trading month? I don't know. Historically, there's a, I don't know. Man, the chat's moving so quickly today. I'm trying to catch back up with it. Top 5 at best. Ah, that hurts, man. It's a dagger to my heart, sir. Yeah, the simulation theory. I told Carol the simulation theory. It messed her up, man. She, for a while, she was like, man, because it really like infiltrates your mind, and you can't stop thinking about it in that way. Because again, like you'll hear atheists, and they'll be like, hey, nothing happens, and they'll make fun of anybody that believes anything else, right? I'm not saying all atheists. There's some atheists that are very reasonable, So again, it's all good. Nobody knows, but I think in a world where some scientists at least agree that there could be other dimensions, simulation theory, like I think nobody knows, and I think it's interesting to speculate on. And I can't really knock somebody for wanting to believe that, good things, and so. Having good parents is a great advantage. Your kids have a great advantage, 100%. Yeah. Top 3 parents in the world. Frostbite. Let me see what your comments said. I have to go look at it, brother. I'm trying to catch back up with the chat. We have to act now? About what? Yeah, the Truman Show messed me up as a kid. My daughter and I recently watched Vanilla Sky. And I've always loved Vanilla Sky, the movie. Vanilla Sky, if you've never seen it, that's one of those movies that freaking sticks with you. Like, Vanilla Sky is one of those movies that you watch it and you remember it, Some people absolutely hated it. I freaking loved it. I remember watching it when I was 12, loving that movie. My daughter said she wanted to watch a sci-fi movie, and I told her, I was like, and I asked her, I said, hey, do you want to watch, the other movie I gave her was, I can't remember the other movie. I wrote them down. There's 3 movies. I was like, hey, you want to watch these movies? And I told her, I was like, Vanilla Sky is going to be the one that's the most heavy. It was The Pursuit of Happiness, Vanilla Sky, Butterfly Effect. I gave her the option for those 3. One was a happy movie, one was kind of a crazy movie, and the other one was a trippy movie. And she chose Vanilla Sky. And I told her, I was like, this is a heavy movie. But yeah. Yeah. Yeah, no, my daughter and I have been joking about tech support. Are you guys buying the Nvidia dip? I don't know. Nvidia's down a little bit over the last few days. I think a lot of it hinges on payroll numbers, to be completely honest. Yeah. So. ISM services PMI data, 10 a.m. All right, so all right, guys. So yeah, we're gonna be pivoting to a. We got jobless claims out today. We have. So today we have ISM Services PMI data coming out at 10. It's actually a really big report. I'll get to it in just a second and kind of detail what this means. There we go. All right, catch it back up in the chat. Let's see what we get. Yeah, Butterfly Effect got bad reviews, but I actually thought it was pretty solid. Like, I liked it. It was entertaining at the very least for teenage John. Hope the Jolts report doesn't jolt the market. Jolts report came out yesterday. Jobless Claims, Philip, or Power Lifter, Jobless Claims is every Thursday, like clockwork. Jobless Claims Unemployment is every Thursday. It's a weekly unemployment filing report. It's the number of unemployment filings. Once a month, we get the actual unemployment percentage, which is tomorrow at 8:30. And then we also get the non-farm payroll report tomorrow at 8:30. Today was prelim non-farm employment data, right? So it's kind of prelim data, but it came in negative. It came in at 99K versus... so jobless claims came in at 227. Non-farm payrolls came in at 90. At 99,000 for the employment data. So wasn't good. Caused a lot of red action, but then the market essentially just bounced right back to. I'll put this up on the screen so you guys can see it. All right. And again, if you haven't already, hit the subscribe button, hit the notification bell. I appreciate it. Thanks so much. Let's continue to grow. Today we're going to be day trading in TopStep live on stream. So we're going to be day trading TopStep live on stream. And again, I've said this before. I'll say it again. TopStep has some of the best funded account program stuff in the world, to be honest, right? So I got funded on this 50K funded account. I'm still working on getting funded in a couple other ones. But this is really, really powerful because I can day trade micro contracts. If I try to day trade the regular NASDAQ, the NQ, it moves so quickly. If I hold it for even a couple seconds, I can be down hundreds or more. And so managing risk in the regular NASDAQ is difficult, right? It's not impossible. It's just difficult. The powerful thing about zero commissions on TopStep X is that I can now trade the micro, which is much smaller in terms of, like, I'm going to short this here, and you can kind of see it takes about $1 per tick, profit or losses, right? And so I can trade with about $1 per tick. It's not the end of the world. TopStep also has some of the best rules of funding in the game, where I can day trade, I can DCA, I can do a lot of stuff. So once you're funded, it's much easier to stay funded on TopStep. And again, there's no PDT in the futures. And so if you want to day trade, do not risk $5,000 of your own money. Again, it simply makes no sense. Instead, try a funded account program like Top Step. They give you a demo. Test your skill with that first. If you pass that test, then they fund you between 50K up to 150K, 90% split. But if you fail it, which is going to be most day traders, then you only lose what you pay for it. In this case, it is $49 for the 50K. And so again, it's very cheap. It's not the end of the world. It genuinely teaches you how to trade. You have noticeably less risk. And if you're past it, you still get a 90% split, which is similar to putting the money up yourself. And they pay out tens of millions of dollars to their traders. You can kind of see their site here. They paid out over 40 million since 2020. Been around for over a decade. And so good stability too. All right, so we're in this trade, right? And again, you can kind of see how slow this moves. I can take up to 5 contracts of this. And it's a powerful thing because it lets me limit my risk. It's just perfect for how I trade, right? It's just perfect. And again, if you want to check them out, they are an affiliate of mine. I'm biased. I'll put this link up if you want to check it out. All right, I'm going to take half of that off, lock that profit in. All right, so we got a nice little breakdown. We just made another 20 bucks or so. Not bad. And so we can scalp small size with this. All right, so we got to watch NVIDIA. NVIDIA is the big one you want to pay attention to, I think, right now. What will happen if the Fed does not cut rates aggressively after stable labor market? Nothing. It'll do more to combat inflation, right? Like, so the Federal Reserve, I try to go over this aspect of it so people understand it. But the Fed, their job is to keep a balanced economy, right? What does that mean? That means that there's not too much inflation and there's not too much economic weakness, right? So they want to keep a balanced level between those two: economic weakness, recessions, depressions, as well as inflation spikes from a too hot of an economy. Neither one of those things is necessarily good. Like, if you don't understand economics, you might think that a thriving economy with lots of spending is always good. It's not. You know, like we see this after 2020. If the Fed wants to save us from a recession and depression, they will lower interest rates. They brought interest rates down to almost zero during 2008, during 2020. Sometimes they'll also do something called quantitative easing, which means that they print money through creating bank reserves and then using those bank reserves to buy bonds and financial assets, which injects liquidity into those markets and influences spending in a positive way. But the consequence of injecting liquidity and stimulating the economy and bringing interest rates down to almost zero is people spend more. When everybody has cheaper access to money unlocked with lower interest rates, if they're paying less interest, you got cheaper access to money. When that happens, what happens is people generally spend more. So when they spend more, what happens is businesses raise prices because they can. And so that's what we saw after 2020. You know, the Fed, we had the economic disaster of 2020 with the pandemic and, you know, lockdowns and everything. And that caused a lot of people to be out of work. You know, we were spiraling towards a recession. And so the Fed had to step in and lower interest rates and do QE in that situation, and also send out stimulus checks. And again, people like to really criticize the Fed for this. They like to get really upset about the Fed and say, oh, I can't believe the Fed did this, because this is what spiked inflation, right? So people are unhappy about inflation. So what do? Is they criticize the Fed doing this. But again, as I always say, if the Fed didn't do this, people would be sitting there saying, oh, the Fed's not doing anything. They're just letting us go towards a recession or whatever. So no matter what, people would complain. But the Fed's job is to keep it balanced. And so at this point in time, post 2020, we had inflation spike because of all the low interest rate environment that we had, and inflation spiked up to 10%, and then the Fed took the other side where they have to protect us from inflation. And so then they start raising interest rates. It's a hawkish Fed. They brought interest rates up to, where we currently are. Federal funds rate is at 5.5 to 5, or 5.25 to 5.5 right now. And again, these are short-term rates. Eventually, they will trickle into long-term rates like mortgages and auto loans and all that stuff. But we've been maintaining a high interest rate environment now for over a year. And so a lot of people are now pushing for rate cuts. Lenders, of course, are not happy about this high interest rate environment because their business struggles because of nobody wanting to buy a house at 3x what the interest rates were a few years ago, right? So nobody wants to buy a home. So they're pressuring the Fed. It's an election year. Generally, during election years, they want a thriving economy. So they want the Fed to stimulate the economy and cut interest rates. Right. And again, it's keeping interest rates high, as I always tell people, is kind of like picking up pennies in front of a train track. The longer you do it, the riskier it is. And so at this point in time, the Fed's probably going to start bumping rates down for the first time in over a year this month in September in a couple weeks. In my opinion, we shouldn't. I think I'm okay. Like, real estate prices have already gone up so much. Real estate prices have spiked massively, and they've already gone up dramatically over 5-year periods. And so I think we can handle high interest rates right now. But again, I'm not trying to buy a house with a mortgage right now either. And so I'm sure it's, depending on the person, it's a subjective thing whether they want low or high rates. I do know lowering rates too quickly could not only spook the market, it could scare the market. If the Fed decides to lower rates 50 basis points, 75 basis points, generally an interpretation of that by the market could be panic. They could say, oh no, something's breaking, we gotta, get out now. And that could happen. And so if we do cut rates, which again, I'm against, I don't think we should, but I think we're going to. But if we do cut rates, I think it needs to be 25 basis points only. I think over 25 is a problem, and it's going to scare markets. So that's kind of my stance on all of it. And it's subjective, what you want in terms of the economy, and depends on, what your investments look like, and whether they're heavily involved in mortgages, whether your businesses are based off of mortgages. Because again, mortgage brokers, lenders, they did really well following the low interest rate environment of 2020. They did really well. Businesses skyrocketed. Low rates were everywhere. Everybody wanted to buy a home. The real estate market was pumping in that point in time. But then the Fed pivoted and interest rates spiked, and now you're paying 3x more in interest than you were a few years ago. And so business fell off a cliff afterward. It plateaued. It basically fell off a cliff for some people and their businesses. A lot of people went out of business. A lot of mortgage businesses failed. They went from making millions of dollars to making nothing, right? You see a very similar thing 2008, right? A lot of mortgages were thriving in that period of time as well, and then afterwards they struggled for different reasons though. But yeah, that's a nuance of it. And so they're really pushing for rate cuts. But for me, inflation spikes and it doesn't go down. And so we need to slow inflation down as much as possible. And that should be our priority, regardless of whether we enter a recession or not. I think that should be our priority. And historically, the only time inflation literally goes down is when we enter those things, recessions and depressions. So. Problem is but again, so Tony says the problem is you're hurting the auto industry, banking, real estate. I understand, but I also think that those industries are due for a pullback regardless, Tony. Like again, real estate prices have gone up 60% in 5 years, brother. 60%. That's not sustainable, and they need corrections. I understand a lot of people started basing their business around these super favorable periods of time for them. But that's not a sustainable thing. Like, we can't just say, hey, let's cause inflation universally to spike up for everybody to save from necessary corrections in those industries, right? Like, again, it's just not the time. Again, it's not the time to bring interest rates down. Inflation has gone up so much, man. So much. That's why people are unhappy. That's why when you zoom in, that's genuinely why people are unhappy. Like 100K a year used to mean something to people. Now people that make 100K a year are living paycheck to paycheck, depending on where they live. And so, and again, that's going to get worse and worse and worse and worse. And there's going to be a greater wealth divide if we start pandering to lenders again, you know. So it's not really, people might think that's what they want, but I don't think a lot of people want that. Well, I don't even think people watch TV very much anymore. Yeah, exactly. And so again, that's a situation where you don't want rate cuts, because rate cuts are going to make inflation problems worse, not better. You know, the people who are going to benefit the most from that are banks. People who are going to be negatively impacted by rate cuts are everyday people that have to go buy groceries and pay for gas and buy cars and everything. Yeah. Well, I'm blessed to make like much more than that, foo. But regardless of how much you make, it's still negatively impacting you. Like a millionaire used to mean something, and a millionaire is not as cool as it used to be, for sure. Why? Because the normal house for somebody right now is $400K, you know, $450,000, and so, you know, it used to mean something. It's all relative to where you live, though. And again, I like people hate on real estate, but I genuinely think real estate is, I'm going to short this. I think real estate is one of the best long-term inflation hedges too, because properties tend to rise as long as you're selective and disciplined about what you buy and when you buy it. Even when you buy it doesn't matter when you zoom out as much. All right, so we're short again. We're going to see if we come back down a little bit. Market's been pushing up some today. All right, I took a little piece off. Technically, it's a losing trade, and I might add it back. I guess I could have made money on that, but that's all right. We got 20 minutes left. I'll add to it now since we have a good enough. We have a room. So we got 2 contracts here. I'm trying to let this work. And again, the beautiful part about Top Step is that I can day trade this with no commissions and futures with micro contracts, and I can scalp these little baby gains and use my edge to play out there. And it's a powerful thing. Alright, I'm gonna get out there. So we made a little bit. I wonder how much I'm up today. I've been scalping all morning. I haven't had many losses either. Okay, so we're up like over 50 bucks. Okay, that's cool. We got a nice little cushion in the day. Yeah, freaking automobile prices went absolutely nuts, man. They went crazy. They went genuinely crazy. And again, if you want to check out Top Step, here's, I'll post the link here. But yeah, man, auto prices went nuts, dude. They went freaking crazy. For a period of time, in that low interest rate environment, you know, you buy a freaking used Toyota Tacoma, that thing's running 40 grand with 100,000 miles on it, or 90,000 miles on it. It's 40 grand, 50 grand. people were nuts right there, man. And again, that's the point I'm talking about. Is like, of course, lenders, mortgage people, real estate agents, they want the stock, they want house prices to go up forever. That's not sustainable. It's not. And again, just to be fair, I'm trying to buy a rental property right now with cash. And so my bias here is I don't mind interest rates being high, because in that situation, cash is king. And so I can come through and offer cash and get some good deals. Quick close, good deals. They don't have to worry about third-party financing addendums and stuff like that, because, you know, and so that's my bias. But I'm sure people who want to get mortgages right now are struggling, and so I think, yeah. Yeah, insurance rates are super high too. Yeah, I've known some dumb people though with driving, man, that I'm not saying they deserved high interest rates. I've known some dumb people, bro. I knew a guy who every time he would get a new car, he would wreck it within a couple weeks. Right? And like, in hindsight, he wasn't the smartest guy, but you get a new car, drive it crazy. You would assume like, okay, you wreck a couple cars, you know, they say it's Einstein. I think somebody else had it, but definition of insanity is continuously trying the same thing, expecting a different result. And so you would assume after he wrecked his first couple cars that he would be like, hey, I got to stop speeding around driving like a freaking dummy. You know, like, let me chill out and stop driving like this. But nope. You know, dude would get a new car. He would finance a new car. I remember he'd finance new cars, new trucks or whatever. And then I don't even know how they even gave him those loans. And then he would just total it. And it was just like, I never wanted to drive with him because it was just so sketchy. Hey, later, Sam. Have a good day, brother. If wages don't rise as fast as inflation, you have to get inflation down. Right, exactly. Yeah, well, the biggest mistake a lot of young people make is that they finance a wildly depreciating asset like a new car. You know, so if you finance a new car, it's one of the worst mistakes you can do if you don't have it like that. You know, now I know we're gonna have some people that are like, hey, well, financing is my only option. Again, I'm here to tell you, like, you can finance a used car 50% less. You know, you could finance a reliably decent car for much less, right? And the problem is that everybody wants to look wealthy. You know, so they want new cars and they're locking themselves into debt. As soon as they drive it off the lot, it's losing value. And so it's going to be a better thing to just, again, if you got to finance, that's fine. Just don't get a new car. It's a huge mistake, usually, right? Depends on the person. Buying a new car as well, unless you really genuinely have money like that. Buying a new car is dumb too. It's not the smartest thing either. Just, again, it depends on how much money you have. Yeah, I haven't been in a car accident that was my fault in decades. Hey, my guy Dean, thanks so much, brother, for the $20 Canadian. I know that's a little bit less than the US here, but I appreciate it, brother. Thanks so much, man. Yeah, it's 15 US dollars. So, well, all new cars depreciate fast. And so that's what I'm saying. You could buy a nice used car, not from a dealership, because those are usually kind of overinflated in price as well. But no, I appreciate it, Dean. Thanks, brother. I was just messing with you. My stepdad, rest in peace. He passed a couple months ago. Is Canadian. Good dude, nice guy. Rest in peace. Canadians are just good people. So I appreciate it, brother. Thank you, man. Yeah, so Corey, he says, John, it depends on your credit, depending on the car. All right, listen. You said you could get a $16,000 brand new car with low interest rates. Or are you assuming a $16,000 down payment is what I'm assuming you mean, right? Even still, it's a bad investment, right? Even if you have low interest rates, it's a bad investment, right? Buying a new car with cash is usually a bad investment, and if you don't have enough to buy a new car in cash, financing a new car is even worse, regardless of the interest rate, because you're still going to pay something. It's going to add up quick, and you're going to lose tons of value just driving it off the lot. Yeah, it's all good. It's all good. I understand. It's cheap. Yeah, that might be true. I guess my point here is regardless of financing or not, buying a new car is dumb. Unless you have money like that. Unless you have kind of FU money, you can do whatever you want. That's different. But financing a new car is bad. Buying a new car is bad. Again, my dad was very frugal. If you've ever heard me tell, my dad is very frugal. Smart guy. My dad does really well, but he's very frugal. And so I'm kind of parroting what he says. But what he says is true, right? Never buy a new car. You could buy a very nice used car, 40-50% less. Same thing, still reliable, still a good car. It might last just the same as long as the new car. But you're saving 50%. You're not locking yourself into long-term debt on something that depreciates half of what it's worth as soon as you drive it off the lot, or maybe a third. John, I really listen to you about what to purchase and what not to. I mean, listen. I'm not a professional, Gibson. I appreciate it though, brother. Thank you, man. But yeah, I'm not a professional. These are just things that I think people make mistakes on. There's a very famous quote: "Don't try to look rich, be rich." And everybody wants to drive a new car. The other quote that I say here at least once a day usually is, "Riches yell, wealth whispers," and a lot of people don't understand that. Although the thing I can't get behind, so my wife and I are watching Succession, the show. Don't ruin it. If you ruin it, I'm gonna ban you. We're on season 1. Don't ruin it. We just started it. They have this quiet luxury idea, and the idea is if you got one hat that costs $200 that is virtually identical to another hat that costs $20, you should buy the $200 hat. And somebody tried to explain that to me. And I think that is the dumbest thing in the world. Somehow consumerism has convinced people to flush money down the toilet just because, right? That is the dumbest thing I could ever imagine. Quiet luxury is cool, but you should always take the cheaper option if it's the same thing. Especially if nobody's going to even know the difference. And so, I saw some videos of it. I think it's called Quiet Luxury. It just made no sense, I guess if you're a billionaire, it doesn't matter. But I think a lot of wealthy people get that way by being frugal. Hey, if 100 is an average IQ score, someone has to be below. Yeah. Yeah, in that case, Curtis, buy new. It doesn't matter. But I think there are ways to find cheap. It depends on how many miles. If you're talking 20, 30,000 miles, it's different. If we're talking a car with 50,000 miles is usually going to be fine, right? Usually. Yeah, what's up, Tiny? Leasing is fine too. A lot of people think that really rich people buy, only buy stuff, only own cars, but that's not true either. A lot of really wealthy people purely lease. They lease cars. Why? Is because they can always have the newest car every year. Instead of buying a new car and then trading it in for another car and then trading it in for another one, it's a lot of work, right? They'd rather spend $50,000 to lease a supercar for a year, and then at the end of that year, swap it out for the 2024 model, and then get that, and then swap it out for the next model and get that every year, than continuously buying and selling cars over and over again. It's a waste of time. So it depends on the situation, But leasing, I'm not necessarily. Leasing is if you have money like that, it's fine. But And again, I'm not an expert. Yeah, frugal's good. Within reason. Frugal. Like, being frugal is good within reason, you know? Like, if you're so frugal to the point where it's casting a very negative impression on you in business, or casting a negative impression on you with your social circles and friends, and I'm not just saying trying to save money where you can. I'm saying, like, letting people buy food for you and then never buying it for said people, or at least never offering to buy it. Like, that's a different level, you know? And so I think being frugal is great within reason, you know? Yeah. Rather have a naturally aspirated V6? Yeah. I don't know. It depends. Depends on what kind of car it is. Depends on what the goal is of the car. Yeah, Quan, hey, listen. All right, guys, we got 6 minutes left. We got a small green day on the books today. Small green day. We'll see if we can build up some more profit towards the opening bell. We'll see. Yeah, Tesla's up a bunch today, guys. If we look at Tesla's been in this range for a minute, though. Like, if we look at it, here's a 20-day chart. Tesla's been down and up and down and up and down and up and down, you know. I don't know. Tesla's is too early to tell about long-term maintenance and reliability. I don't really know. I know the older Teslas are starting to look a little rough, you know. So, but I can't say yet. I don't have a Tesla. The Cybertruck looks cool, though. Yeah, C3 AI had a bad reaction to earnings for sure. They're down big on it. Again, I thought they were losing hype, though, over the last couple earnings calls. You know, they were really hyped up like a year ago. And since then, they've been kind of fading into a little bit more obscurity. What tweet are y'all talking about with Elon? He tweets so much. Alright, guys, so NVIDIA falling down a little bit. We got 3.5 minutes. Alright, so Tesla is going to reveal 2-seater and 4-seater versions of the Robotaxi. Yeah, for me, he's way too political, but, yeah, he's just too political for me. I think it's bad if you're selling things to consumers to be that political. Regardless of the side or anything like that, it's just bad. The biggest thing is it creates enemies and it causes problems, and it's just not good if you're selling things to consumers. And again, maybe he's going to benefit from it. I don't know. Nissans are good. My dream car as a kid was a twin turbo 300Z. This was before 350Zs and all that stuff. I really wanted a twin turbo 300Z. Then I think I gravitated towards RX-7s, and then I wanted a twin turbo Toyota Supra, and then I wanted a NSX. You know. So I went through my stages. I mean, you gotta change the oil roughly every, what, 5,000 miles anyway. If you have a turbo, it's probably even more necessary. Yeah, I had a Prelude. It was fun. Nissan GTR? Yeah, the new GTRs are cool. I see a couple Skylines in my area, like actual old school Skylines. Some of them have the right side seating too. Yeah, so I'm shaking my legs. If it looks like I'm like bouncing up and down, it's just because my legs are shaking. We got 1 minute left, chat. 1 minute. Right, you're alienating customers. It's a bad move, I think. Yeah, it depends on synthetic too. All right, guys, we're gonna get ready to day trade right here. We'll see what happens. 45 seconds. Yeah, I forgot to do another poll here. Pretty split down the middle in that regard. Let's see what else we got. Are you bullish or bearish on today's open? Are you bullish or bearish on today's open, guys? Vote on the poll. Let me know how you feel. Alright guys, there's the opening bell. So we are dropping down now. We are at 18.9 thousand. Neo pushing up to 4.5. SPY up to 551s. Yeah. Yeah, those old RX-7s are my favorite, man. They were really cool. They were like my dream car growing up. The only problem is that they were rotary, right? So I understood the engines less, you know. Like on the other internal combustion engines, I'd tune them up and put intakes and exhausts and headers and, you know, sometimes turbos and stuff. But rotary was just a different. I didn't understand it as well. All right, so SPY up. Nvidia bouncing up a little bit at the opening bell. Still completely flat on the day, though. You can kind of see the previous closing price on Nvidia is right here at this light blue line. And so we still got some time to go here. Yeah, no, I understand how a rotary works. I guess my point is I understand souping them up less, like tuning them less, you know. All right, so again, we got to spike up. Nvidia's testing that 200... Yeah, Nvidia spiking up to 105s, almost 106s here. I'm going to let the opening bell play out first. All right, so spiking up at the opening bell. Nvidia now technically green on the day. That's dragging NASDAQ up some with us. Yeah, they don't last. Yeah, I think if they did, I would probably end up buying like an old RX-7 and souping it up right now. The problem is like buying some of those cars. They're so old with so many miles on them now. I don't know if the investment is a good one. All right, guys. Nvidia spiking back up to almost 107s now at the opening bell. I'm going to put up the SPY here on the bottom right. Russell's coming down. You get AI at 19.5s. So AI bouncing back a little bit after its big earnings downfall. It's up to 107s now on Nvidia. 107s. All right, so we got this little dip. I'm gonna buy this little dip and see if we get a bounce here. We got two contracts. We are again trading on Top Step's funded account program right now. I am gonna add a little bit here. We are on Top Step's funded account program in futures. I'm day trading the NASDAQ, which basically is the QQQ price action in futures. And again, it's very similar to day trading stocks in this way. I'm definitely down. I'm gonna have to sell. All right, somehow we got out green on this trade so far. Somehow we made money on that trade. We rebounded completely back up. But you can see it's very similar to day trading stocks. There's no PDT in futures. You can day trade short, buy market, sell market. Very similar to stocks. No PDT rule. I can day trade the QQQ price action and the NASDAQ, the SPY price action, and the S&P 500 ETF or futures contract. I can day trade gold. Patterns are very similar. And again, the big edge is look at the commissions, man. I keep talking about it today because it's real. 74 cents a trade. With micro contracts, that is, with micro contracts. So that's incredibly cheap, incredibly cheap. And so I can take these type of trades and slowly grind up profit. And I think that's a very useful thing. I'm actually green in this funded account now too. And again, if you want to check out Top Step, link is in the description. Check it out. They're a sponsor of mine. I'm biased, but again, I can't say good enough good stuff about Top Step X, to be honest. Nvidia up to 107.50s. We are seeing some green action. Look at the SPY's big and huge rebound. Remember, we got ISM PMI data coming out today. I forgot. We got ISM PMI data coming out in 25 minutes, guys. All right, guys. Yeah, so again, we got ISM PMI data today, chat. There we go. Alright, look at this massive spike in everything here. We got Nvidia all the way up to 108s. The SPY breaking highs up there too. The NASDAQ just shooting up. It's in 20 minutes. Oh, wait. We got... Yeah, so at 9:45 we have services PMI for August. It's the big one is what's called ISM non-manufacturing PMI. What it really is services PMI, right? So the big one is ISM non-manufacturing, which is services PMI data. Look at this huge rebound in everything. Yeah, huge rebound today, guys. So far, it doesn't mean it's going to hold. Alright guys, so yep, we are hanging out waiting. Man, what a massive rebound. We're up a little bit too much for my taste here. I'm going to start shorting this. 2 contracts, short. It's kind of risky trying to catch a falling knife like this. But I think we're up so much we might correct a little bit. There we go. Boom. Alright, so just made another $30. Shorting the top there. Riding this rebound back. I wonder how much I'm up today. Okay, we're up almost $100 already today, so not too bad. Alright guys, so we do have at 9:45 in 5 minutes manufacturing or services PMI. It's expected at 55.2. The big one is ISM at 10. ISM is expected at 51.2. Services expected at 55.2 in less than 5 minutes. Alright, so we got the big dip. SPY is actually pretty flat. How can Nvidia pump so much in 8 minutes? Because Nvidia is just volatile. All right, so Russell's coming back. Yeah, so here we go, guys. We got 2.5 minutes left. How many news will be released today? Well, there's a bunch. Like I said, today the big volume of news is the important thing to understand. So the volume of news today. Today we had non-farm employment, jobless claims numbers at 8:30, non-farm employment at 8:15. At 9:45 we have regular services PMI, and then at 10 a.m. we have the ISM non-manufacturing services PMI report. So yeah, we got a lot of stuff, but it's all right. We had actually more than that. We had like non-farm productivity and some other stuff. Ford auto sales came out 183,000 units. Yeah, short-term Nvidia could have been oversold. It had such a big drop percentage-wise. All right, guys, here we go. We got a minute left, basically. 1 minute left. All right, guys, here we go. Again, this first one's not big. I don't know how much it's going to move markets, but the 10 a.m. one's big. All right, guys, so we're waiting here. All right, look at that high break. So the data is out. Services PMI came in a little bit higher than expected at 55.7. I'm sorry, guys. Again, I was looking at something else. 55.7 is what it showed up as. 55.2 expected. So slightly higher than expected. The market did go up a little bit on this report, but not a huge release. The big one is going to be at 10 a.m., guys, like I said. But this one came in at 55.7 for the first one. The regular services 9:45 one, which, again, scheduled to drop for August numbers. Is ChargePoint a buy? I have no idea. I don't like ChargePoint as a stock. But yeah, the global composite 54.6. Wait. Yeah, so the global composite's 54.6. Services came in at 55.7. I'll put this up in chat. Here's the report. But again, the big one drops at about, let me put a timer up. The one that's probably going to be more influential, I mean, is going to be dropping in about 13 and a half minutes. All right, so we're ripping up over highs again. I'm watching Nvidia here. Take some more risk. I'll add a little bit to this if I can. All right, so just made another 20-30 bucks. We're up 120 or so in the day right now. 120. We're really kind of pushing towards that $200 profit target that I want. Yeah. So far, so good. Honestly, check out my trades today, guys. So remember, Top Step X, no commissions, right? I'm trying to see my trades today. If I could look at the date. Today's the 5th. So my trades start right here. Let me put this up. My trades start right here today. So these are my trades. I've only had 2 technical losses. And I think those were fill related problems, right? So those are fill related. But again, $7, $10, $7. This is why I like Top Step X, is because 74 cents a trade with micros. So I can just kind of slowly add up $7, $10, $7, $6, $17.50, $11, small $10, $20, $15, $8, $12. So I can use those little small gains to just kind of grow my profit on the day. And if we look at my actual like stats, trying to see if I can find today. So like here's today and yesterday. You know what? I'm just gonna look at today. So here's today, right? One thing that I'm really proud of too is because here's my account, right? You can see my stats. 85% accuracy, and this is pulled directly from Top Step. So we're up a net 112, right? So not quite 120, net 112. 85.71% gains, right? 85.71, so 86% accuracy. My wins are 5 times larger than my losses, right? My profit factor is 29.18, and this is why you can see I'm so excited about the zero commission thing, is because if I trade micros, I can really trade my best self, right? I can trade the best way I can with this. Whenever we're trading such a big size in terms of like regular contracts, it's super emotional thing, right? But with micros, I can take that out of here and kind of slowly grind up wins, Look at the profit factor, 29.18. It's the ratio of total profits divided by total losses. So, even if I add yesterday's, which I think I lost a little bit of money yesterday, after everything, right? I think I lost a little bit. I did. I lost. Wait. Yeah. Yeah. So even if I add yesterday's to it, we still got a winning profit factor. And we're still at 85.71%. Average win and loss is a little bit worse. Thursday, best day. Wednesday, worst day. So we're still doing pretty good. Alright, anyways. Sorry, I started getting wrapped up in this drop. I don't know if I should want to buy this up. I like this big down wick. We have 10 minutes, though. I tend to think we're going to get choppiness. I'll try it here. So I look the other way, so I'm down about $5 here. Now I'm technically green on this one. I don't know if I want to add to it or not. I'll try to add to it, see if that works. Oof, maybe a bad time to add to it. Gave a lot back, and then it looks like we rebounded right back. So we lost $20 on that one. Let's see if we rebound right back up here. I'm gonna cut it. So we lost our biggest loss there, which is $40. We're still up almost 100 on the day. But let me get this out of the way. What happened to my regular one? Honestly, I don't want this up. There we go. And see, I was right about the direction too, unfortunately, but it's all right. We got 8 minutes. Hey, thank you, Tiny. Have a great day. I want to get the time and sales out of there. All right, I'm gonna try to give like I'm okay if I give up my cushion on the day. I'm gonna take our first big risk of the day, I think. Shorting the top up here. Take a little piece off. Add to it. You know, we have this ISM report coming out, which is why I'm taking a little bit larger size on betting on choppy behavior right now. I know if we squeeze up, I'm going to be giving up a lot of it back, which it looks like we're starting to do, but then we're retracing all the way back up. Let me see. Yeah, let's take that risk. There we go. There we go. All right, so we made it right back here. I got one contract left. I don't know what I want to do. I'll try to add it into this. Oof. Kind of deer in the headlights, unfortunately. I wanted to see if it would reject at the very top of this range, especially with the economic data coming out. At least I was hoping it did. And I can't always trade into the profit that I have. You know, it came right back down. A little bit indecisive in terms of range. I'm debating on whether I want to add and take the risk. I don't think I should. I think the extension that we're up today, I'm gonna have to just give it back. I think I'm probably still green on the day, but a little disappointing for sure. Yeah, we're still green on the day, so we'll figure it out. I might just slow it down, and now I'm gonna have to wait until this economic data report comes out. But you can see Nvidia up. Gold, and this is why you give up trading when you're ahead, chat. At least that's what I should do. Ahead of this PMI report, though, guys, we are up big. Or no, we are. The market is up big on the day leading into this PMI report. All right, 2 minutes left, chat. 2 minutes. Let me see what else we got. We're almost there. We got 4 minutes left. Well, we ended up grinding up a little bit. I decided to trade off stream. Mostly because, we got pretty good trades off stream. Market's indecisive. We got 3 minutes, chat. 3 minutes. So we're up about $70 now, which is not. It could be worse. You can kind of see we got a little string of green trades in. I'm gonna put these charts up. Yeah, so again, 3 minutes left, guys. 3 minutes. We have ISM PMI data, the biggest report of the day at 51.2. And yeah, sorry, guys. You'll see me kind of quiet down a little bit into my trading when I really want to focus. All right, so yeah, we are up $80 today. So we're kind of right back where we were. Again, if we trade micros, we can usually kind of scalp away. Just to show you guys the list here. Here's my trades. Definitely worse accuracy, but today overall we did pretty good, you know. But here we go. So gold, I'm going to put gold up. We got 2 minutes left. I'm going to put gold up. Here's gold. Where's lifetime highs on gold? I got up to 25.54. 25.70. Okay, so we still got $15 before it broke highs. SPY testing intraday highs. Excuse me. All right. Here we go. Services PMI is service sector. So everything involves services. So services managing, it's the purchasing managers index is what PMI stands for, right? It's a strength or weakness in services. The ISM non-manufacturing PMI data for August. It's a report on business based on data from a survey from 370 purchasing and supply executives. A reading above 50 indicates non-manufacturing sector is expanding. Below 50 indicates a contraction. And we're expecting a slight expanding services sector. So at 51.2 is what it's expected at. We got 1 minute left, chat. 1 minute left. Again, subscribe, hit the notification bell. We appreciate it. And here we go. 45 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. Markets are mostly pushing up ahead of this report. Nvidia's up to 109s. Gold is down a little bit. SPY is right there. So, again, we got 30 seconds left or so. You guys ready? Whew. All right, here we go. All right, so here's the report. I'm going to pause this right here. It's a little bit early. We got we're really around 6 seconds left. Again, 51.2 is what's expected, 51.2. And here's the release. It came in at 51.5. Guys, 51.5 versus 51.3 expected. 51.5 for ISM non-manufacturing PMI, higher than expected. Generally speaking, this shows strength in services. And so I wonder if the Dow is going to benefit the most from this. Because the Dow, I would say, is more service heavy. The S&P. Yeah, S&P spiked up a little bit. Services sector strength generally helping markets. You can see it spiking up some here. It's good for services and economic growth, I would say. It's at 51.5 versus 51.1 or 51.2 or 3. Here's that report right here, so we'll put that report up. There's a report, again, 51.5. Market's like spiking up on this report. Look at it. It's up to 552s. Nvidia up to 109.50s. The S&P is up to 55.30s. We also had prices come in higher than expected as well. Worse for manufacturing, though. Non-manufacturing employment's down a little bit, though. So we are seeing negative signs in employment, I think. And so what I worry about is if tomorrow's payroll numbers come in low, the market's going to dump. I don't know for sure. Unemployment factors into it as well, but services strength is optimistic here for markets, it looks like. So interesting. Yeah, so we are spiking up on this report. Big move. I'm going to start to short a little bit here. I don't know if this is a risky play or not. I'm going to add to it. So we come right back down. Took a little bit off there. Oh, it gave me a bad fill. It's all right. That's a better fill. All right, so made another 20 bucks. We're up about 100 bucks on the day. And again, this is really useful because of the low fees that I can get scalping and day trading micros on TopStep X, which is a very specific platform from TopStep. Really great platform, to be honest. I'm actually green on this account. I can trade how I want to trade in micros, which I'm really pumped about. We also have a news that, and again, if you want to check out Top Step, they're one of the most legit funded programs. They give you a demo, test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. They've paid out over $40 million. Again, and they're one of the most legit funded programs in the world. And again, their funding rules are some of the best in the game. Zero commissions is a ridiculous edge, especially if you're trading micros. So don't underestimate it. They're a sponsor. They pay me money. I'm biased because of it. And so, top 3 plugs in the world right now. You can check it out right there. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. And yeah, so far so good. I don't know if I'm going to push for the $200 day. I'm up about 100 today. I tried to push for that and took big size on one trade, and it ended up just getting bumped right back down. But so far, we're pretty good today. If we put up our stats, even with the contraction that we had in our numbers here, you know, we're still doing pretty good today. Wait, September 5th is what today is. Yeah, so total P&L, we're at 97/60s. Profit factor went down, unfortunately, but it was never, that wasn't a sustainable profit level. But, you know, we ended up coming back, taking some good trades. 70% win percentage, much worse than the 85% that we had. But we've had 26 winning trades, 11 losing trades on Top Step X so far. So not too shabby. Yeah, gold's going to be probably dropping with everything too. That's normal. SPY up to 553s. Nvidia over 109. So Nvidia bouncing back is a great sign, to be honest. It's a necessary sign. Again, I don't know personally if I think now's the time to buy gold. So what was announced at 10 is services PMI data, this report right here. You might be delayed in the stream, so hit the live button if you haven't already. Hit the notification bell. Appreciate it. Yeah, it's been a great time, honestly, man. Like, my channel's been growing a lot recently. Yeah, my channel's been growing crazy amounts since. I really do appreciate it. It looks like most people are fond of my channel. Yeah. You know, we got so many recurring viewers that are actually subscribers, so I appreciate you guys. I really do. This channel's a blessing for me and my family, of course, and couldn't do it without you guys. So again, genuinely appreciate it. Yeah, it's fun, man. Let's see what we have Monday. Market's still pumping up today too, man. Just strength. Like even the PCE stream, man. We got 5.7. Yeah, so. A lot of unique views every stream coming from search, browse, Suggested videos going up. Sorry, I'm checking my channel stats. How are we getting viewers from Twitch? It says 6.3% of my viewers are coming from Twitch. How do you think that is happening? From Twitch? Most of them are coming from Google search. The most new viewers are coming from Google search, right? Which is great. Or from YouTube search, I mean, sorry. And browse. So, hey, we appreciate you guys. Yeah, gold, a lot of people mentioning it. Let me cover it. Gold is probably, like, look, people hedge against, people buy gold whenever you have macroeconomic uncertainty. If gold's going down, it usually means there's more stability in the economy. And so, like, stronger services is going to be good. It's probably going to cause the dollar to go up and gold to go down. You know, I'm guessing the dollar is up. Yeah, see, I can predict the dollar's up without even looking at it because it's predictable, right? Like, when we have higher services, dollar is stronger. You know, when the payroll data come out, this is what happened. We had this big, massive drop from it. So, it goes back and forth. But, yeah. I think so, Mr. Robbers. All for Humble John. Definitely top 3 most humble people in the world right now. You know, because when you're this handsome and good looking and just wise, but beyond your years, you know, I'm like freaking Gandalf over here. You know, when you're this smart and wise and great at trading, truly, I think it's just a normal consequence of being this devastatingly handsome, they would say. Some people call me that, you know. You know, it's not every day, but I would say it's like every other day somebody's like, man, you are just a good looking dude. And I'm like, yeah, no, I appreciate it. You know, we try over here. We try. Anyways, I don't have red hair, bro. My beard is occasionally red. It's my Irish roots, you know. Is someone duplicating your stream here on Twitch? I don't know, man. Again, it's only 5% of external views is coming from Twitch, so I don't freaking know, man. I haven't been on Twitch in a while, so I genuinely don't know. I could look. Yeah, I don't know. Yeah, don't forget Humble. Definitely Humble, for sure. Top 3-ish. Yeah, it could be viewers mentioning my stream and people being like, oh, go to beginner trading. Yeah, that's cool. Alright. Obviously, top 3 most sarcastic traders in the world right now, guys. So listen, you know. SPY pulling back a little bit. Yeah, but how would I track that? I'm curious. Let me see. I'm looking at like PCE data. Unless PCE data, like I was looking at PCE data stream. Unless that means something else in video games. Let me type this in. Does PCE mean something different in gaming? I'm looking this up now. What does this mean, guys? Somebody help me out. I don't even know what this means. PC gamers? I don't know. Love your stream. You're relaxed, thoughtful, and informed. Any topic is good, which makes it fun. Jiu-jitsu and taekwondo. Yeah, man. Thanks, brother. I appreciate it. Okay. Never mind. What I will say is never sign up for Comcast Business, ever. You know, there was a moment in time when Texas was freezing and we had internet problems, and I desperately signed up for Comcast Business thinking I would actually have better internet. It was twice as much a month for Comcast Business, hoping I would have better internet. They came and they signed me up, and we had worse internet than we did with residential. I tried to get out of it. They said no, I would have to pay thousands of dollars to get out of my contract. And so, yeah, never sign up for Comcast Business. It's a complete waste of time, and it's unnecessary, and it costs more money to get worse service. And the only thing they market it for is that they have more support, which doesn't freaking matter. Comcast is terrible, you know. I remember I was calling them that day, and they were like, you know, you call like the customer service reps at Comcast are the most ridiculous people, right? Like they're the most ridiculous people, you know. I'll be like, hey, my internet's not working. And I remember I told this joke because it's really true. I told this story at the time, and my viewers liked it, so I'll tell it again. I got on the phone with Comcast, my internet wasn't working. And I say, hey, my internet's not working. And they said that my internet wasn't working because I had caps in the name of my Wi-Fi. I had caps in the name of my Wi-Fi, which is just a freaking ludicrous implicate, like a ludicrous thing to even imply, right? Like just a ridiculous thing. You know, it would be like if my neighbors, if they told me that my internet didn't work because my neighbor stumped his toe next door, and so my internet's down. You know, just a ridiculous thing. They're just throwing anything out there. They don't even want you on the call. One of the best feelings ever was canceling Comcast. You know, and the way I got around it was that I told them, I said, hey, I know I'm from Baton Rouge, and so I know Baton Rouge doesn't have Comcast. And so if you're moving to a place that doesn't have Comcast, they'll let you move. And so I told them, I said, hey, I'm moving to Baton Rouge, guys. You know, let me see if we have Comcast in the area. And they looked it up and they were like, oh, no, we don't. You know, oh, well, it's okay. You know, I hope you'll consider us if we ever open it up there. And I'm like, sure, guys. Never moved. Never came back. We ended up getting fiber optic. I pay $75 right now for fiber optic internet. Month to month, no contract. And that's the future. And that's why I'm skeptical of Comcast companies moving forward. I'm skeptical of AT&T and DirecTV because streaming services are going to fail, or streaming services are going to completely replace those businesses, those kind of old school legacy media brands. Streaming is going to completely replace them. And it already kind of has. And we're seeing this thing. I will say that it's not a perfect system because originally these streaming services were advertised. All right, I'm going to buy this one thing. Originally, these streaming services were advertised to us as no commercial, you know, useful, no commercial based products, right? And then they basically got everybody to switch away from general cable with commercials. And now that everybody stopped using general cable, now we got more ads than we ever did. They did the whole switcheroo on us, guys. And that's all right, I guess. I still like streaming better than Comcast. All right, so we made a little bit more again. Now we're up about $120. I'm really tempted to try to make that push for the $200 day. All right, guys, I'm going to get out of here. I love you all. Y'all have a great day. Again, check out Top Step if you want to day trade with me. Again, it's really useful to be able to do what I've been doing today, which is day trade with no PDT rule, zero commissions, with micro contracts and futures. I can basically day trade. It's essentially like day trading the SPY and Q with no commissions, with small size, which I could scalp and make easy money doing that very, very regularly. So hopefully I continue this. Again, check out Top Step if you want in the description. I love you all. Y'all be good. Tomorrow is the single biggest day of the week today, guys. The single biggest day of the week. Why? Because tomorrow we've got non-farm payrolls and unemployment rate. Massive report, can completely change the trend of the market. And we're going to cover it live before anybody else, as we always do here at 8:30 Eastern Standard Time. Hit the subscribe button, guys. Hit the notification bell. Thanks so much. I appreciate the love and support. You'll have a great day.